Hello, everyone. Welcome to InvestorThread.com. I'm your host, Josh Enomoto, as always. So thanks for tuning in because we've got to talk about DJT. Okay, now, if you haven't watched the video about Trump media and technology, I would recommend to watch that video first because I'm going to go over some concepts that you may not be entirely familiar with if you're not well versed with options. So you can still watch this video. I'm just saying that if you want to get a better understanding of what's going on, you should check out that first video. Anyways, the second video here's what I wanted to talk about tonight. Okay, the opportunity for DJT was, in my opinion, before that. Before election day, because there's a lot of DJT, the underlying social media platform, Truth Social. I think it is let's be honest. This is a crap company. It doesn't make any money. It hardly generates any revenue. It loses money consistently. This is a platform that is only largely relevant for the election, and outside of the election and outside of hearing from Donald Trump, it's not really that particularly relevant. Okay, if you want to hear some controversial talking points, sure, I suppose you want to go there, but really a lot of companies avoid Truth Social because they don't want to be messing around with some of the talking points. And to be honest, when you're talking about extreme talking points, there's just no money in it. I understand, there is a certain sex appeal when it comes to being, to talk against being woke and stuff like that. And there's a certain sex appeal about being based, as the kids like to say. But the reality is there is no money in controversial topics, right? If there was money in controversial topics, especially topics related to, nationalism and other sort of extremely controversial topics, my goodness, nationalist organizations or outright racist organizations would be one of the most profitable enterprises in the United States. The reason that they're not is because there is no money in that kind of garbage. So that's the problem with Truth Social. It is the most base platform out there, right? There's a lot of anger in that platform, but outside of the election, there's not really a whole lot of market. There's no market for that kind of junk. That's why a lot of the podcasters on the right, they have their faces censored and stuff because they know, right? They know that you start talking the truth, so to speak, you're going to be canceled, and you will not make any kind of money being canceled. So that's why there's just no money there. So interestingly enough, the options market is pricing that very volatile situation that could erupt post-election. Now, I was looking at the options chain right after the election, the ones that expire on November 8th. Okay, this is very interesting. Now, if you recall in that first video, I had an idea that I brought forward as a trading idea that you sell the $12 put and then you buy the $10 put as your downside capping of risk. Okay, and that trading setup, sell at 12, buy at 10, would give you a max reward, a max credit of 51 cents. So long as the trade works in your favor, you will get 51 cents per contract or $51 applying the options multiplier. And the max loss is $1.49 per contract or $149 when applying the multiplier. and the risk reward is 292 to 1. Here's something very interesting, okay? So I was looking at bar chart, and specifically bar chart Premier, the greatest trading tool ever. If you're not on bar chart Premier, you've got to be on bar chart Premier. Anyways, I was looking at bar chart Premier. It does all the wonderful calculations for me. It's so easy, so wonderful. And here's an idea. Again, for the November 8th expiration date, you sell, get this, you sell the $11 strike, the $11 put at $2.59. This is a part of a bull put strategy. You buy the $6 put for 70 cents, and the break even comes out to $9.11. You'll recall in the first video that I was really hammering the point that I think $10, that psychologically significant level, is going to be the line in the sand. That's strong support. So we have a break even on this trade of $9.11. Get this, the max reward, of course, this is the difference between the two premiums. Max reward is $1.89. And the max risk comes out to $3.11. So max reward, applying the multiplier, $189, almost $200, and the max risk is $311. And so, yeah, you are taking a greater risk, nominally speaking, but you're getting almost $200 in reward that's possible out of this trade. The risk reward comes to 1.65 to 1. 1.65 to 1. Now let me just check the probability of this trade. Give me 1 second here. But I think the probability of this trade, I'm looking at oh my goodness, the probability of this trade, according to bar chart's proprietary indicator, we're talking 71%. 71% percentage probability that this trade, this bull put spread that I just mentioned, is going to be profitable, at least somewhat profitable for the speculator. 71%. And the risk reward comes out to 1.65 to 1. That is incredible. Now, it's not necessarily, in my opinion, free money in this case. It does seem like it, but here's why I'm a little bit cautious, okay? The reason why that there is such, that this trade looks extraordinarily compelling is because of the implied volatility for this option chain that expires right after the election on November 8th. Not, right after, but this is the most recent or the first options chain for DJT that will expire post-election, okay? And the implied volatility for this chain comes out to 257.11%. And the historic volatility is only 94.29%. Now, of course, historic volatility, that shows this thing is anticipated to move. But the IV, the implied volatility at 257, we're saying that even with the significant movement that DJT is expected to move under based on normal dynamics, 257 for that option chain, we're talking about even wilder magnitudes of movement in the underlying security, and that's why the reward is so much higher relative to the risk. Because remember, on that first video, I said the risk reward was almost 3 to 1. And here, in this case, it's 1.65 to 1. That's almost like capping the risk reward, that profile, by 50%. I mean, come on, guys, that is crazy stuff right there. That's craziness, right? here's the thing. Here's why there's a little bit of an inefficiency, I believe, in the calculations. The Black-Scholes model and other proprietary mechanisms that are used to calculate these probabilities and calculate the pricing of these options. I do think that there are some inefficiencies because we just don't know what's going to happen on election, and if the results don't go the way that Trump wants them to, basically if Vice President Kamala Harris wins, there could be social uncertainty going on, right? There's a lot of uncertainty going on. So that's why, this is the interesting part. The options market is pricing a lot of that magnitude. That's why you're getting 292% of IV. In my opinion, the inefficiency here is that we just don't know what is going to happen, really. I mean, this is unprecedented circumstances. Are we only going to get IV of 292? In my opinion, maybe it should be 392. Maybe it should be 392 IV. Maybe we should get a lot more for underwriting that risk. Now that's where I'm a believer again of risk. Taking what the market is willing to give you. But my goodness, we really don't know what's going to happen on election day, and we don't know what the response will be from the Trump side. And that's why I think that implied volatility is already high as it is. I think it should be higher, and I think that's where the inefficiency comes from. But anyways, if you think that this is going to be a controlled circumstance in the election, that the Trump folks are not going to have an energetic response like they did in January 2021, if you believe that, hey, maybe I'm wrong, right? Maybe the market is incredibly efficient, or the pricing is incredibly inefficient in a favorable way. I'm saying that it might be inefficient in an unfavorable way because I'm a believer that the IV should be, maybe it should be at 500%, honestly. Maybe it should be at 500%. But right now the market is giving you IV of 257%. And if you believe that there will be a normal election, that the response will be normal, maybe IV should be lower. Maybe IV should be at 100%. But the market, for whatever reason, has decided to give you 257%. And so if you believe that there will be stability in the United States, or if you believe that there could be, there could be, some situation where Trump and the Truth Social platform will enjoy some relevance, then maybe the IV is inefficient to your favor. For instance, let's just say that here's one possibility of why applying a bull put spread with this high IV could be a compelling idea. Let's assume that Kamala Harris wins the 2024 election, okay? And let's assume also that the Trump folks readily generally accept the election results, and there will, not be a contested situation, okay? But let's also say that Trump is upset and is angry and has said some wildly obscene things post-election, and people are now interested in the Truth Social platform simply because they want to know what other things Trump might say or do or whatever. And so maybe even if Trump loses and Harris wins, the anticipation of wanting to know what Trump will say next could mean that there could be a significant rise in DJT stock. And if there is a rise, and you believe that, let's say you believe this hypothesis, that IV of 257 could be extraordinarily compelling. Now, if a security, any other security had IV of 257 and the HV was below 100%, boy, I would be tempted to underwrite that risk. I would be very, very tempted to underwrite that risk because the market is giving me a rich premium to underwrite that risk. However, we are talking about Trump. We are talking about an election. We are talking about a divisive environment, and I just don't know what is going to happen. So I'm not particularly jumping on this trade. I'm not pounding the table on it, but I just wanted to share with you the interesting dynamics that are out there in the options market, the derivatives market, and if you know what you're doing, you can extract profits from these dynamics because maybe the market is inefficient in your favor and you see something that other people don't see. That's the power of options. And so if you want more ideas like this, if you want more content like this, please show your support by going to investorthread.com. I'm not going to say, hey, subscribe or whatever, but if you want to get real compelling insights into these markets, and especially in the options market, please go to investorthread.com. We just started. Okay, this is a venture that started in September, and we're slowly but surely building this up. So if you want to know about ideas that very few other financial publications, if any, are talking about, please go to investorthread.com. Thank you.